stock market today. Analysis for October 14th, 2022. The Nasdaq down 3.08. Maybe you like that number, 308. S&P 500 down 2.38. 10-year U.S. Treasury yield up 7.2 basis points. Gold down 1.68%. Bitcoin down 1.01%. Oil down 3.73%. And we had reporting of the banks today. But going into next week, October 17th through 21st, here is some of the more well-known stocks that are reporting. You got Bank of America, Charles Schwab, and Bank of New York Mellon on Monday. Netflix, Johnson & Johnson, United Airlines on Tuesday. Tesla, IBM, Procter & Gamble on Wednesday. Snap, Nokia, American Airlines on Thursday. Verizon, Schlumberger, and American Express on Friday. So that should be pretty exciting. Again, you can get the same information for yourself at stocktwits.com/earnings-calendar, and then go to the appropriate date you want to look at. Hey, my friends, I've been mentioning to you that what I think is going to happen with the stock market as far as continuing to go in a downtrend, as long as if the government and quasi-government agencies and how that all is all kind of tangled together, if they don't do something like quantitative easing, like Operation Twist, or under some other name that ultimately gives the same effect. So look what I just found out today. U.S. Treasury asked major banks if it should buy back bonds. And interestingly enough, when we talk about names, right? Talk about different names. This is not QE. It's not quantitative easing. This is not quantitative tightening. This is none of those. So it's interesting. They love to get that desired outcome, but complain they love to get that desired outcome and state that it's not doing whatever XYZ it was before. I mean, quantitative easing. What does that really mean? It seems to be, I could be wrong, but it seems to be some sort of kind of hocusy-pocusy type of term, so that way it kind of confuses people. And then later on, you could say you're doing, instead of doing quantitative, this is not quantitative easing, this is just, this is buying treasuries. That's it. And then, nonetheless, we got this whole article here about Janet Yellen talking about, since there's been quantitative tightening going on, would it be good for the Treasury to start buying the bonds? Treasury is asking dealers about specifics of how buybacks would work in order to better assess the merits and limitations of implementing a buyback program. There we go, QE under a different name. It's not QE because it's not named QE, but if it gets the same result as QE, what does it matter if it drives the stock market up? And maybe causes a lot of inflation sometimes down the road. And to me, I thought I just really got a good kick out of this. It is not QE or QT. This is none of those. Yep, of course not. It never is. It never was. It never will be. Yep. And the good old fear meter. The Chicago Board of Options Exchange Volatility Index, the VIX. VIX went up just a little bit today, and we're looking at our all-time high. If you missed yesterday, I think it was yesterday's video. So there's this saying that I heard. I don't even know how long ago. I remember hearing it back in 2012. Maybe I heard it before. When the VIX is high, you buy. When the VIX is low, you go. And if we put a comparison on with the Nasdaq, you see at these times where the VIX spikes up, it happened to be that the S&P 500 was at a low point. And you know what some people think that they should do in the stock market? They think that they should buy low and sell high. In fact, that seems like a really good idea. Buy low, sell high, make a profit. Well, if you look at the VIX, it seems like the VIX is high when the S&P 500 is low. But right now, you see we're right here, right? The VIX really isn't that high. And look how low the S&P 500 is. But the VIX isn't really that high. So what does that mean? Well, it doesn't mean anything in black and white. But it might indicate that since the S&P 500 has already been dropping and the VIX really isn't high, that if the VIX spikes up, perhaps the S&P 500 could drop considerably lower. It's amazing right here. You can see how S&P dropped, VIX spiked up, and it's overlaying so perfectly where they're touching each other. Right here, VIX spiked way up here. You see that S&P 500 was way down here. So we'll see if there is some dropping in the future. But, you know, if they're going to do something that gets the results of quantitative easing, but call it a different name, hey, you know what? Maybe we can get this trend to keep going back up. Speaking of trends, the MMRI trend has been up, and we're closing it out at 282.20. And you see anywhere from 200 to 300 is in the high range of risk. And so we are in the high end of the high range of risk. And we are creeping into this extreme levels of risk. And when we looked at how far the S&P 500 has already dropped and how low the VIX was, maybe if something happens and causes a lot more fear, maybe we could really be moving into this extreme levels of risk and potentially see a big stock market drop. Or we could see some sort of monetary, fiscal, governmental, quasi-governmental agencies getting their little fingertips in there and bringing stock prices back up to all-time highs. Maybe we could see either. Who knows? But the treasury yield, we know about that. That today is at 4.01, so moved up. And generally speaking, when this number goes up, generally speaking, equities go down, generally speaking. And that is definitely what we have today. But now let's put this in relation to a greater amount of history, because right now it looks really high, right? Because we're looking at 6 months of data. What if we look at all the data that Yahoo Finance has here? So all this data, what's it going back to? Well, it's going back to 1962. And we see going back to 1962, we got all the way up here to 15. So 4 in a historical context is pretty low. You know, going back to as far as the year 2000, we were around, looks like, what'd that top out at? I don't know, this crosshair is so hard. A little less than 7%. So, I mean, to get back to historical norms or historical averages, we got a long ways to go. And part of what we see here in this, you know, constant bull run for the last X amount of years, going back, we go back to going back to around, okay, here's 2000. Had this little bit of a bear market for a couple years, bull market, got back about to that same spot, right there, it's about the same spot, crashed, and then what was that? Oh, there was some issue. There was this issue right in here where it crashed. People call it a subprime housing crash. People called it was a financial crisis. However, Jeff Schneider says it was a monetary crisis. Hey, you know what? I don't know the semantics of it. Maybe it's not semantics. But what I do know is I can look at this chart and I can see went down. And then what I can also see, TNX. Let's put that 10-year treasury on here. Is it going to work out for me? Well, no. It is not really going to be easy for me. I can see here around 2000, started going down. Started going down. Right? Look at that. Started going down. Now that's a down slant. So that would lead us to conclude that possibly when the U.S. Treasury rates are going down, then somehow the stock market is going up. So right now, when these rates are going up, maybe the stock market's going to be going down. Are these absolute things? I don't know. You have to figure that out for yourself. But let's just pretend they're not. Let's pretend that they're giving you indications of things. You know, for example, if you're driving down the road and there's a red light, if you go through that red light, is it an absolute that you're going to get in a car crash? It's not an absolute, is it? Because if there's no other cars coming, then it doesn't happen. But that red light is giving you a warning that there could be other cars coming, right? So do with it as you will, but you know, maybe it's good, at least what's good for your good buddy Brent to do, is follow Robert Kiyosaki's advice that there's 3 sides to a coin: the heads, the tails, the edge, and Brent's job is to stand on the edge and look at both sides. You can consider doing that for yourself too. Look at all this information coming out there and make the best decision out of it as you will. And let's look at what happened in the market today. We have been looking at, but I mean specifically the equity market, the stock market, S&P 500. We see it dropped down, and now we're closed into, you know, it's like we're kind of in the halfway of this big bullish candle right here. You know, maybe it's a little bit, you know, 50%, just eyeballing it. It looks like it's just a tad bit under that 50%. So we're back down here. We're just basically, even with this really powerful bull candle here, look at that, basically sideways. So we still got the same thing, big downtrend in the Pro 2 candle. And as far as the trading today, let's just look at the trading today. Let's just look at the 14th. There we go. So each one of these representing 15 minutes. And we see it just dropped down and then just kind of went sideways. Yes. And the technology sector, looking pretty much the same. Dropped down, went sideways. Is that our volume today? Yes, it is. And basically went sideways, right? Everything dropped down here. Yesterday, gap lower, shot up. Today, opened a little higher than it closed yesterday, but selling pressure just brought it back down to about 50% of that candle. And basically all the gains that were made yesterday were wiped out today. We'll see how things go starting next week. Okay, the healthcare sector. Well, the healthcare sector, at least on this daily candle, looks a little better because our candle, today's candle, is kind of in the top at 25% of yesterday's big bullish candle here. You know, gapped up a above yesterday's close, traded into this resistance area, but selling pressure brought it in. In fact, selling pressure brought it down here under the 25-day moving average. And we see a similar thing. It opened up, kind of had two doji candles going sideways, dropped off, went sideways a little bit, dropped down, and basically went sideways for the day. Financial sector. I've been excited to look at this all day since they were reporting, and pretty much a bunch of nothing. And although this is, this is still like in that top, it's definitely in the top 50% of this candle. I would say 50% is about right there. So that's a good sign. Maybe it's going to start building a base on top of in this sort of range versus down here, which would be positive if you want the stock market to go up. But overall, you see we had this big drop right here, and then it kind of just went sideways and kind of slowly filtered down with a big increase in the volume there. Consumer discretionary. Oh, looking the same. All right, we're still in this big downtrend, and look at this. Oh man, this one, out of all these different sectors that make up the S&P 500 that we're looking at, this one is the bearish. It's the bear here. We see it gapped up in the open, and selling pressure just drove it down, and it's closing in this like 10% of the body. Now the full trading range, we're definitely in the bottom 50% of this full trading range, but as far as the body, so let's just say the 50% to be safe with that. IWM and closing a little bit, I would say the 50% of that bull candle is about right here, so kind of in the getting into be the bottom part of that 50%. And ooh, look at that, sold off a little more. We see that a little more drastic right there. Qs. Man, so isn't it interesting if you're watching these videos daily, or if you're looking at these charts daily, isn't it interesting how so much of it looks very, very similar? It's really the advantage of just, at least in the beginning, definitely, of just trading. If you can just trade one stock, you really start getting to know the personality of it. But eventually, you got a handful of stocks, and you can really see their personality. And this part, what we're doing here, in case you missed some of those previous videos, is these ETFs are sectors that make up the S&P 500. Now there's other sectors other than these, but these are that have a lot of weight to the S&P 500. So basically, if we get an idea of what these are doing, it gives us an idea of what the S&P 500 is going to do, which at the moment it seems like it's going down or maybe sideways at best case scenario, unless they start doing something that gives you the result of quantitative easing, but they don't call it quantitative easing, or even if they do call it quantitative easing, whatever. So Qs, UUP, probably got a different look over here. Bam, look at that, different look. Money's been flowing in, got a strong dollar. I'll hit this resistance area here, and boop, where now this little lower resistance has become the new resistance. So technically we got a high and we got a lower high. We got a low and we got a lower low. But that is in a very short-term trend. We see our weekly stochastic, man, maybe it's going to keep going to the downside. But you know what? Look what happened here. All right, it went to the downside, and what did it do? Brrr, rallied right back up. So be careful. Be careful. Dollar, basically, it bounced up a little bit in the morning, kind of dropped down, and sort of just went kind of sideways. That's what a bit of this doji candle, but it had a little bit of a range in there. TLT, looking at those 20-year bonds. 20-year bonds, they're on a, well, the 20-year bonds have been on a one-year decline. I can't think of something super witty to say with that in the spur of the moment. 20-year bonds on a 12-month decline, whatever. You can see a really sharp decline right through here, right around, what date is that? Starting the beginning of August. sold off and kind of went sideways, sold off a little more, then went sideways. What happened with oil? Woo, look at that, man. Oil took a drop today, but broke this 50-day moving average and hanging out above this 20-day moving average. Still kind of in line with this. And you can see there's kind of these different levels to this range, right? There's this one that's like $86 floor, but also an $86 ceiling. If you look here, and there's kind of like another little one right here that's like 86 to 82, and then 82 being the top, and then maybe 76 being the bottom. So I wouldn't be surprised if we see more of this volatility, just staying kind of in this range. I wouldn't be surprised. I am making a financial bet on it, so I'm hoping it does. I'm hoping I will be happily surprised that I was right. And gold, GOLD, what is going on with gold? We took another drop in the gold futures price. The paper price of gold took a drop, and we got a low, we got a higher low, maybe. You know, gold kind of has this range going on too, right? Here's a top around 1820, and we seem to have this kind of 1760, and then from 1760 to about 1720 something, and another thing around 17, and we could just kind of keep breaking it down. But right in here, that 16, about 1680-ish, right in there, and right now it's kind of seems like it's putting a ceiling in around that 1680 spot, and maybe we'll see if it's going to make this floor around somewhere between the 1640 to 1620. And what can you do with that? Well, I know what I'm doing with it. I don't know what you can do with it. I know what I'm doing with it. Oh, you can paper trade. That's what you can do. Test out anything you can think of. Bitcoin, man, Bitcoin. This is, you know what? Bitcoin is getting a little bit boring. Look at this. It's barely trading. I guess that was a pretty good. It had a lot of movement there. Almost $1,000 move, a little less, $800 move or so. That's pretty good for that day, whatever day that was, the 14th. At the 14th, yeah, I guess we're trading on the 15th already. But yeah, looking pretty weak. These pretty light. You know, if it's going to stay with this like real light movement, then it would. My guess would be it's going to be possibly moving to the downside, even though it's building the strong base right in here around this low 19,000 area. So maybe it would take some real strong pressure to the downside to push it into the lower territory. But strong pressure, I mean, you have the 200-day moving average on top of it, which is really far away from here. You got the 50-day moving average on it. You got the 20-day moving average on it, 20-day moving average on top of it. But you know, it keeps like teasing us, keeps going over those 50 and the 20, and it goes under and it goes over and it goes. But overall, we see like the 50-day is down. 20-day, if you look at, let's see if that we can easily do this. Here's 20-day. Today, here's the 20-day. I mean, you can see it's a very subtle slope down, but it is about 8. Well, come on, there we go. So we're looking at about going back to, what is that, July, looking at about 20,300, and now today looking at about 1940. So yeah, it's overall been this kind of slow decline. So we will see. So paper trade, you know, get yourself a paper trade account. Paper trade, try stuff. In fact, go to iofsuccess.com, download some of this stuff, especially this one. Get a mental framework of how you can pick a stock that you can sell cash secured put options on. One of the big values about selling cash secured put options is that if you follow the guidelines that I'm laying out, you're going to be picking stocks that you wouldn't mind owning the rest of your life. So of course you got to be a little mindful. You got to pick a stock that is going to be around for a while. So you don't want to be picking stocks like Nikola. You want to be picking stocks that are more like more like Johnson & Johnson, but in your price range, right? Stock that has the potential to be around for 100 years, and it'll probably be around as long as you are. So you got to make sure that you got some things in check. But after that, what ends up happening, if you own the stock, you pick a stock that gives you dividends, whatever price you originally paid for it, you start recouping the money that you paid through dividends and through selling covered call options. You might get you might cash out. One of your covered call options might get assigned to you, and you might get the stock called away. And if you're picking good strike prices, that's at a profit. But if that never happens, and you just simply own the stock the rest of your life through selling covered call options and through collecting dividends, sooner or later, whatever amount of money you paid to purchase the stock, you will have back into your pocket. You will have your stock, and you will still be collecting dividends and selling covered call options. You have created, over time, an infinite return on that investment. Robert Kiyosaki will give you a high five, and life is grand. Go to iofsuccess.com. You guys have a fantastic day. Talk to you later. Bye-bye.